Hi all, in this video I'm going to go over two pound US sell attempts I did on Friday. My overall this trade was based on my overall daily view, and in the daily I see that price is consolidated over here and sellers have built up their positions for a while and made a very strong move down. In contrast, price has done very little building up of buy positions over here, and the buyers have come in multiple pushes rather than this one sell push down. Therefore, I was expecting a good reaction at this resistance, anticipating a range sell all the way to these lows. And I wanted to catch this, of course, on a lower time frame to get the good entries, giving me high profit potential if I ride the momentum of the move. Now my first entry was based right around here, right over here, and the logic for this was, okay, at this point when this sell came down, my anticipation was that buyers would have to go all the way up to at least this area, because these sellers could not take out this support. So that was my anticipation. And that's what happened, and I got interested when I saw this sell move down, buys come up, sell move down again, creating a bit of a failure to make a higher high. And when this reaction happened, buys come up, react from this resistance, and start to come down. I think at this point in that entry, my entry was based not on the move down but on the retracement, and I think that was where the mistake may have been, because the retracement was quite sharp, and I caught the move on that sharp retracement, which I think is doable, but in some cases only, and not in this case, because in this case this buyer was untested and these sells were not coming from a fresh area. So for those two reasons, I think it made the probability of this sell trade a little bit less likely and maybe not worth taking. But I was still confident in the high time frame view, and I knew that we were getting quite close because it was close to the daily resistances. So when I got stopped out and I saw this moving up, I was thinking this is probably the fake out move up, and so let me try and I was feeling relatively confident that this is a fake out move up. So my thinking was, let me try and catch that fake out move. So my logic for the entry over here then was based on this lower time frame, which was, so my entry criteria for this was, remember, I was anticipating just a very sharp move down. I was not anticipating this sort of stuff, because in a fake out move I don't really expect this sort of stuff, although of course we see that on the hourly this is totally possible. This is just the fake out on the hourly, so it's very possible to just expect some sort of distributions over there. So this was a bit of a risky entry, but I think it was okay, because if I had missed this entry and had gotten stopped out on this second attempt, I would have probably tried again, because I was that confident in the higher time frame picture, in the higher time frame analysis. Now, my criteria for entry on this was, okay, I need price from over here to come crashing down very strong in a smooth way, no breaks, to break this support over here, and once that happened, I hit the sell. Now of course we see that the entry was not the best, but I think it was acceptable. Some people may say, oh, I should have waited for candle close and things like that, but I think given the risk, given the actual type of entry I was aiming for, I think it was acceptable to take this entry, provided I had my stops above over here, and if I got stopped out, I should have been trying again in almost all the cases. So I managed this trade as per my plan, that was to manage it based on my higher time frame view and do not play the in and out game, especially on this lower 3-minute time frame. So I was happy with that. And as the trade went on, I did not get stopped out there. As the trade went on and started, and this price came from over there to over here, making a low and a lower high and some more distribution, I was feeling quite confident. I liked to see this happening, because even though it was quite close to my entry and everything, I liked seeing all of this distribution, and I was very, very confident that this was very distribution, not some accumulation or any of that stuff. And so once again my read proved to be quite good and played out, creating a very sharp move down over here. But unfortunately I got taken out by this spike all the way up to this area. Now I had my stop loss to break even when price was all the way down here, but this spike was so sudden. I'm not sure what caused it. Maybe it was some unexpected news, because it was not, I don't think it was economic or planned event news. But this spike was so sudden that my broker did not fill me at my stop loss over here. I actually had my exit order filled over here. So that was unfortunate, and I'm not sure how I could have anticipated that. Of course, there is the argument that, hey, after this sharp reaction I can probably take some partial profits or something like that, but I think given how I am choosing to play the market these days, that is, if there is a higher time frame picture, I will try and hold on until that higher time frame picture realizes itself. And if there are any counter moves I anticipate, I will play hedge trades for that. I will not take profit from my initial entries, as I want to ride the move from my initial entry all the way down to the higher time frame targets. So, but the thing was, I don't know how I could have caught even a counter hedge buy entry over here, because my requirements for hedge buy entries are that they need to still be based on a valid structure. I will not simply hedge my position just because some sharp reaction happened. That's a bit illogical to me, because as far as I know, this candle over here, it achieved nothing. It just reacted from this support, but it's actually achieved nothing in terms of breaking anything. So I think this was completely unexpected. So I'm okay with getting stopped out over there. Unfortunately, I missed out on re-entries because I was a bit lazy and also was a bit busy. But I think the re-entry opportunities would have been somewhere around here, especially on 3 minutes, once I saw that it was reacting from this resistance, and the stops for that would have had to be above this wick, I believe. Or another re-entry possibility, and would have been somewhere around here, anticipating a reaction at this resistance, ideally looking in the lower time frame to see if there was any sort of pause. If there's any sort of pause at that area, it's much easier to catch. And indeed there was a bit of pause, so that was okay to catch. Stops would have had to be, I think, above this area or this area. So there were definitely re-entry possibilities, but I couldn't catch them due to not being able to watch it, and also being a bit lazy to look for re-entries, especially after being taken out like that. Now this kind of sharp reaction thing, it got me, it reminded me of something I was thinking about a few days ago, which was when can I expect a sharp reaction and when can I expect a non-sharp reaction. So I think the two types of reactions I can expect are the sharp reactions like that, or the slow build up of positions reactions like that before it goes up over here. So I was thinking about when can I expect these two kinds of reactions, and I think the general answer I have now, I may do another video to go more into my research and findings in this area, but the general answer is when there is a build up of positions and a breakout. At the first test of this build up of positions area, I can expect a sharp reaction. But after that, it's less likely. And more important than all of this is the market logic for why. And I think that's very simply explained by sharp reactions happen when there is excess liquidity at a level. And this excess liquidity typically occurs at areas where a breakout has happened after a consolidation. Now, smoother reactions like this, consolidation reactions, happen when there is not much liquidity at that level and positions have to be built. So those are my insights. That's my logic. It has actually been quite reliable with the testing I've done in terms of anticipating when to expect sharp reactions, when to expect less sharp reactions. But I might do another video on that to cover my learnings on those. So anyway, I have not done my high time frame analysis for this week yet. Pound USD is very likely to be on that list, but again, there may be a better pound or better US pairs. I'll have to see. So that's all for these two trade reviews. Thanks, and comments and questions are very much welcome.